Since the mid-1950s, the federal government has spent about 20% of GDP, and it's raised about 18% of GDP as well. This equals $5 trillion in spending in 2020. The chapter is going to measure a couple things, one of which will be, where does the money come from? Where does the money go? For how long can the U.S. government keep spending in terms of how raising money? As of 2020, the federal government takes in about $3.6 trillion per year. That works out to nearly $11,000 for every person. You'll notice that there's three sources that account for more than 90% of the revenue: individual income tax, Social Security, Medicare tax, corporate income tax. If we look at the receipts, you'll notice the individual income tax brings in about 50% of all amounts for the U.S. economy. Social Security, Medicare, that brings in about 36% of all revenue. And businesses only bring in about 7% of the revenue for the government. The government utilizes this revenue to spend money on various things in our economy. When we look at the marginal tax rate, it's the tax rate paid on an additional dollar of income. We look at this and we notice that every additional dollar we get, we spend it on something. Now the average tax rate is looking at total tax payment divided by total income. Individual income taxes are the single largest source of revenue. So that's why when the government focuses on tax challenges, that's where they want to focus on, because that's where the changes will occur. And those are some of the things we'll be looking at for this week.